But right now the play is Microsoft, $5,600, 17 days. Let's see how it goes. Hey folks, welcome to Super Stock Bros. My name is Ace, and today we're going to be talking about the plays we made today and how I'm planning to make $5,000 in 17 days. Okay, so let's just dive right in. Our portfolio is sitting about the same because we made a play today that's going to execute over the next 17 days, even though I'm going to be making more frequent plays. This is the one that I really liked for this week, and it's actually a double dip back into Microsoft because it dropped back to the levels that we were playing around the first time, which was 285. And I really don't think it's going to drop much further, even if there's going to be a bear market. I think it's going to come down and then probably bounce back right up. So I'm very comfortable holding a position where I can actually just roll it forward indefinitely, essentially. So my risk is mitigated basically to nothing. And I'll show you that in a second. But first, let's take a look at the Microsoft chart using a few indicators that really any trader should have on, which is, we have RSI, we have the moving averages, and more recently I've been using the Bollinger Band, which is very nice for determining a range for which a stock is staying between, because really the plays that I'm doing is going to essentially bet on these ranges. So if Microsoft stays within this range, within 17 days, we cash in that full 5,600. So that's essentially what we're going to be doing, and you can see quite clearly here that Microsoft has a range of 292 to 278. I believe that range, I've been following Microsoft pretty closely, so that's the range that it's going to stay at. Even if it breaks out, it's going to probably revert back to this range until, of course, Microsoft breaks out and then has a new range for which it's staying between. So the band, which is this big blocky yellow space, it's very useful for determining what ranges that you should be making your options plays at. And I'll show you what I mean by that. So the range that I actually picked was 280 to 275. I said that Microsoft won't be in this range within the next 17 days. All right, so if Microsoft drops below 280, then I have to think about rolling it forward, and then the play won't yield as much of a high percentage that I'm going to show you that it's yielding right now. So actually, let's dive right into that. So on this play, it was a 280, 275 play, and we yielded 23%. That actually got us around $5,600. Okay, so what's the play we're looking at here? We're looking at the Microsoft 280, 275. So this is a bull credit spread, which means basically I'm saying if it drops below 280, then I lose a little bit of money. If it drops below 275, I lose quite a bit of money. My total risk here is about 24,360. So let's just remember that I need to offset this risk by pushing it further into the future, which means that this current return of 23% in 17 days, again, insane, that will be reduced. So if I were to push it out a month, then you're going to reduce this by half. If I push it out 2 months, you get the gist. It's going to keep reducing, but that reduces my risk of losing this entire amount to essentially zero. So I am not risking any money here. What I'm essentially saying is I'm putting this money on hold until this play is completed. Okay, so it's just a difference of terms there. For those thinking that I'm just throwing away 24,000 or gambling 24,000, that's not quite correct, because as we learned in early statistics, if you have so I have an 83% chance to win this, so that means 17% chance to lose. Let's just say 17% happens the first month and then 17% happens the next month. Well, guess what? It's 17% times 17%, which ends up being percent chance to lose of only 2.89%. So I'm only going to lose 3% of the time if I roll it once, and then if I roll it once again, if the probability stays the same, well, then we're getting into less than 0.5% here. So just keep that in mind when I say risk of losing. Really what I mean is risk of opportunity cost of not putting this money elsewhere, essentially is what I'm saying. I really like this play. I like Microsoft 280, 275, best stock in the world, like I said. I'm really only looking at the best stocks going forward. I'm going to go for these safe and pretty high yielding plays. 23% is insane. Like, a lot of times you only hope for that percentage on your more speculative plays. So that's the play I made. It was 60 contracts at 94 cents, and we have till August 27th for this play to come off. Now, another thing to note here is I don't have to wait till August 27th. I actually predict that this play is going to play out within 5 days. And we can get about 50% of this. So we can get like 11.5% return in 3 to 5 days. That'll be insane. If that happens, I might actually pull out again and then double dip once more like I did last time with the previous bullet. I actually was on track to earning $5,000 and then I pulled out for $2,100, which was perfectly fine. I made that in 2 days. So if we can do that again, then I'm all for it. But right now the play is Microsoft, $5,600, 17 days. Let's see how it goes. So from the very beginning of this challenge, I've said that 20% per play, as risky as it might be, that's what we're going for. And we're gonna try to do that, around 20 times. And that's how we're gonna turn our original investment of around $10,000 into $1 million. All right, so that's the road to $1 million challenge, and we're sticking to that. This Microsoft play that I made is 23%. That's above the target. And you know what? We're going to make it there. I firmly believe it's going to happen. It's only going to take 17 days, maybe even less. So we'll see how that goes. And this really goes to show, even at the top of the market, with one of the biggest stocks in the world, you can still make a 23% investment. That's the power of knowledgeable and advanced investing, right? And using these kind of techniques, I know that we can make those gains.